and I'm late, everybody. I'm late. Give it a second. I'm late. Sound check. Is it working? Sound check. Are we live, everybody? Give me a second. Yeah, the YouTube ad blocker doesn't work anymore, so need to wait. Give me a second, everybody. Yeah, I'm sorry, I'm 2 minutes late, right? I need to... Does anybody know a good YouTube ad blocker, everybody? Yeah, we don't want to see propaganda, right? Before the class. There you go. There you go. Sorry about that. Alright, and good morning, good evening, good afternoon, students and traders all around the world. This is Mike, the FX boss, broadcasting live on YouTube and other streaming platforms. Welcome to the Forex and Crypto Trading Course 101, everybody. Remember, what's the goal? To bring you from zero to a millionaire trader in 3 years, right? Boss, can I be a millionaire in 1 year? No. Complete beginner, 1 year, it's not enough, everybody. Skills take time. If you want to write down something, everybody, skills take time, all right? And never forget, you're going to graduate from this course when you have your chart set up and ready for trading. Number 2, you have a strategy in place. You understand how you win, how you lose. And now you have a complete understanding of how this market works, so you can analyze the market and make an educated prediction. Today we are going to work on number 2. We're going to talk about entries and equity management. Please disclaimer, this stream is not trading or investment advice. Okay, remember, if your way is not working, why don't you try mine? And if you didn't receive the free manual, send me an email, you know, for extra courses and webinars and seminars. Then we have Skype. Hello, Alexander, how are you? Alright, everybody, so let's go in here, and this was from yesterday. Today the conversation, everybody, it's about strategy, entries and equity management, okay? So we've learned about the market wave, okay? We've learned about the market wave, which is this one. And we learned that the market wave, it's combined, you know, what makes the market wave are the short-term trends, right? We've learned about this too. And so the market wave is the yellow, the short-term trends are the green, okay? And we've learned about counter trend lines, so the best entry, the best technical entry that you can have. It doesn't matter what you're trying to do. It doesn't matter if you're a day trader trading a retracement, everybody. Okay, it doesn't matter if you're a day trader trading a retracement. The best entries are end of retracement trades based on what you're trying to do, okay? So the best entry to trade the market wave is here. The best technical entry to trade a retracement is in here. And the best entry on the short-term trend, right, is in here. It's always the end of the retracement trade, okay? If you want to write this down. Boss, can you repeat, please? Yes, sir. The best entries are the end of retracement entries. Hello, Alexander, how are you? Okay, everybody? Is anybody in here who does not agree that the best entry is end of retracement entry? There is no right or wrong, don't worry, there is no right or wrong, you know? I have some friends who say, no, the best entry is the breakout entry. You know, what can I tell you? Make sense? But talking about coaching beginner traders, right? Or intermediate traders, the best entry is end of the retracement entry. Okay, now guess what, everybody? Why the best entry is the end of retracement entry? Okay, I'm going to leave this question opened. Now, talking about the market wave, you have a trend line like this. Let's circle this trend line in red. Talking about trading the retracement, you have a trend line like this. And talking about trading an extension on the short term uptrend, you have a trend line like this. Boss, what was the question? Why the best entry? We have different entries, right? You have the end of the retracement entry, just an example. And then you have the, if you want, you have the breakout entry. Why the end of the retracement entry? It's better than the breakout entry. Who knows why? Alexander says because of the stop loss. Exactly, because of the equity management. Alright, because of the equity management. Okay? Now, let's go step. Everybody, we are working today. It's going to be more technical, it's going to be more theoretical class today, okay? We are going to talk about more about what I'm going to draw and a little bit of charts, alright? Today we're working on number 2. You have your strategy in place. Okay? I'm telling you already, you might not like it because it's going to be more or less me charting the theory, right? Then we're going to take charts. Okay? So let's address the market wave first. Okay? Market, and then we're going to, okay, we're going to mix, alright? Okay? So here, if you want, you have a bullish candlestick formation, something like this, okay, and you can now, talking about strategy, maybe not today, but until tomorrow, please define, everybody, okay, define, are you going to put, let's write this down, homework until tomorrow. Why homework? Because you're in a course. Homework until tomorrow. Okay? Define where you are going to put the stop loss. Always. Always. Hello Sam, how are you? Hello Mo, how are you? Mo, did you hear the pay once in your lifetime and be part of the advanced institutional trader course forever? Mo, did you see the offer? If you didn't see, I need to do it again. If you didn't see the offer, I need to talk again. You know, it's a lot of. Hopefully you've seen it Alright, so homework until tomorrow. Define where you are going to put the stop loss always, okay? If you enter in here, are you going to put the stop loss below the... Okay, so we're going to write this down too. And text in here. So you can put the stop loss below candlestick formation. You can put the stop loss below trend line. You can put the stop loss below relevant previous relevant low, below previous relevant low of the pattern. Okay, everybody, you are going to enter at the same end of retracement. Now variable number one, let's color code this in orange. Decide, not today, decide until tomorrow, think a little bit. If you are going to put the stop loss below the candlestick formation. Yes, I did, just not live. Alright, thanks God. If you have any question, just ask, okay, or send me an email. Okay, everybody, so if you want to put the stop loss below the candlestick formation, if you want to put the stop loss below the up trend line, or do you want to put the stop loss below the previous low of the pattern? Yesterday I explained to you, if you want to put the stop loss below the candlestick formation, if you are entering on the 4-hour chart, listen to me, traders who want the short stop, listen to me. I told you yesterday, if you want to put the stop loss below the candlestick formation and you are trading the 4-hour chart, on what time frame should be the stop loss on your candlestick formation? What's the answer? If you are entering the market wave, you are trading the yellow market wave. If you are entering on the 1-hour, 2-hour, 4-hour chart, but you want to put the stop loss below the candlestick formation, on what time frame should the candlestick formation be? Or if you want to enter the daily market wave and you want to put the candlestick formation, the stop loss on the candlestick formation, where should be the time frame? What should be the time frame of the candlestick formation? Who knows? This was the yesterday lesson about multiple time frames. We're talking about how the higher time frame controls the smaller time frame. Everybody, you need to learn this. I'm looking for traders. Never forget, it's not a joke. We have 2 institutions that are looking for traders as we speak right now. Okay? Oh, you need to have the results first. Make sense? 1 hour, no? If I want to enter, if I want to short the market on NZDCAD daily chart, example, all right, or buy. So the market is making hard highs, hard lows. All right, so in here, right, this is the counter trend line break back in time. Okay, if I want to enter the market, everybody, here, okay, counter trend line break, to be more precise, there you go. All right, now maybe not this one, maybe, okay, so do we agree, everybody, that maybe, just maybe here I'm going to have confidence to buy, right? 1, 2 hour, 4 hour, no. Buy the 4 hour should be under the daily. Sam, everybody applause to Sam. The higher time frame. Don't confuse apples with bananas. Okay, don't confuse that you are going to see the change in the short-term trend first on the smaller time frame. Okay, don't confuse the two. Candlestick formations on the higher time frame are changes of the short-term trend on the smaller time frame. This means that the stop loss goes, this is specific. If you want to put the stop loss below the candlestick formation, you must sit on the higher time frame. Okay, don't confuse the two. All right. So everybody, do you agree that, you know, if the market is in here, maybe I'm not going to have confidence because I'm going to think, oh, maybe I'm in a channel, you know, this is what I'm seeing, right? The market tried to go up once, went back down, tried to go up 2 times, went back down. The market tried to go up 3 times, you know, so I'm not confident to enter here, but bam, now I'm going to enter, right? Okay, so if I'm on the daily, the stop loss on the candlestick formation would go down in here. Agreed? This is the candlestick formation. Give me a second, everybody. Red. Okay. Boss, why this candlestick formation? Why not this candlestick formation? Because you are looking at the most relevant. Alright, this is a candlestick formation, this is a bullish candlestick formation, and this is a bullish, but this is the most recent one. Alright? Alexander says, I understand now. Alright? Okay, everybody? So, I'm telling you, don't do this. If you want to put the short stop on the candlestick formation, put on the weekly. Alright? So, I need to put a vertical line. Okay, so this would be my entry, right? I'm going to enter in here. Give me a second. This would be my entry. So I need to go now on the weekly to find weekly. All right, can you see it, everybody? Now from the weekly, the stop loss, if I delete the circles, the stop loss is in a different place. Can you see it, everybody? Type in the chat, yes, I can see it. Type in the chat, no, I don't see it. So the violet is the appropriate stop loss. Boss, why on the higher time frame? Why not on the smaller time frame? One more time. Because the higher time frame controls price action and movement on the smaller time frame. The higher time frame patterns are more relevant than the lower time frame patterns. The higher time frame patterns are stronger than the lower time frame patterns. Does this make sense? That's the why. Okay, everybody? If you want to put the stop below or above candlestick formations, check the higher time frame. Okay? Fair enough, somebody's typing, not on YouTube, on the other streaming channel. Fair enough, unless you are a scalper. Okay? If you're a scalper on the 5-minute chart, then it's on the scalping time frame. Okay, everybody? If you're a scalper on the 1-minute chart, 5-minute chart, 15-minute chart, I would say not anymore. Okay, everybody? I know it's a lot of knowledge, right? Boss, why the scalper can scalp on the 1-minute, 5-minute and not on 15-minute, 1 hour? Because scalpers go 1-for-1 risk-reward ratio. Boss, can I trade? Can I scalp the candlestick formation on the 15-minute chart, on 1 hour chart, and I go 1-for-1? No, don't do this. Boss, why not? Because you are going to lose most of the time. Boss, how do you know? Because it's statistically proven that it's random distribution. Markets 1-on-1 on the 15-minute chart and above becomes, talking about scalping, become random. You cannot make it 1 for 1. Okay, everybody? This is statistically proven. Would this make sense? Boss, I don't believe you. I love the non-believers. Try it. Do this for 3 months and come back to class and tell everybody what did you figure out. Does scalping 1 for 1 candlestick formation on the 1 hour chart or 15-minute chart work? No, I'm not. I'm not joking. I'm not joking. The best students are the non-believers. Why is that? Because they are thinking. Make sense? If you are selling something, the best buyer is not the one who says, oh yeah, I buy. The best buyer is, no. Make sense? The objections. Why? Because he's thinking. Make sense? Yeah, maybe buying was not the best case. Maybe it's a bad example. Of course, the best buyer is the one. Of course, the best buyer is the one who buys, but you got the idea, right, everybody? When we're studying something, you know, me too. When I study something, it's better for me to think and doubt and question, like, oh yeah, just buy, you know, just Fibonacci is coming soon, you know, and it's better for me to think and question, like, oh, just buy the C and Fibonacci is going to make you money, you know, it's... All right, everybody? If I go back to the daily chart, you know, so this would be the example, okay? Now, as you can see on the 1 hour chart, if I would put the stop loss on the immediate candlestick formation, everybody, the most recent one, would we be stopped out? If I put the stop loss on the most recent candlestick formation, would I be stopped out? See, this is common sense, it's logic, okay? It's logical. The higher time frame is going to help you to have less losers, okay? Make sense? Study the charts. How many of you are studying the charts? Study the charts when you have daily candles like this. Study the charts when you have daily candles like this, example. And study the charts and you would say, oh, if I would put the stop loss below this candle, I would be stopped out. But if I would put the stop loss below the weekly candle, I would be safe. Study the charts, everybody. Okay? Study the 4 hour candles or the 1 hour candles and think like, oh, if I would put the stop loss below the 1 hour candlestick formation or 4 hour candlestick formation compared to the daily, I would be in a much safer place. You are still going to have losing trades, but less losers. Would this be valuable to you to have less losers? Moses, I'm studying the charts. Very good. Can you see, everybody, how this works? We would have, this would be an unnecessary loser, make sense? If you come to work for me or for me and you do this at your skill level, I'm going to ask you, Mo, why did you do this? Not Mo, Alexander. Alexander, why did you do this? Why did you put the stop loss here? And Alexander would say, I don't know, I guess I love the short stop. First warning, those losers are not acceptable anymore. Alright? Make sense, everybody? If you know that something has a statistical advantage, hear me out. If you know that something has a statistical advantage, why wouldn't you use it? This is now Forex course 2 conversation. If you know that something has a statistical advantage, it wins more than it loses. You're still going to have losers, but it wins more than it loses. Why wouldn't you use it? I'm going to tell you why you are not using, because you don't get it that you're in a business and money is the name of the game. Yes? You hear me talk a lot that this business is not what you think it is. You heard me telling a lot that you think it's about the chart, you know? You think that the chart is what makes the money. Some of you believe that you are making the money. You know, the statistical approach to the edge. As a matter of fact, the understanding of the edge is what makes the money. Not you, you're just clicking the mouse, not the chart. The chart is not making the money, believe me. Not the strategy, okay? But the understanding of the statistical approach of the edge. And this understanding, it's emotional, it's not even technical. All right, everybody, after this beautiful sermon, this is you entering the end of retracement trade on the market wave. Okay, now, if you are a day trader trying to take advantage of a retracement trade, you are going to enter at the end of retracement 2, end of retracement 2 in here. All right. So there is no right or wrong, okay? Now, everybody listen up. Don't confuse different patterns, all right? Because I've told you something about the market wave. Now I'm going to tell you something different. Okay, so don't think, oh, but you just told me. Don't mix apples with bananas, okay? Now, if this is the, so the example was, this is the 4-hour chart. 4-hour chart. The yellow is the 4-hour chart, right? And this is the same 4-hour chart in here. Okay? Now, if you want to enter here, which I would not advise you to, because it's just a bullish candle in a downtrend. But if you would enter here with the higher low, alright, with the higher low, where would you see this higher low happening, on the 4-hour chart or on the 15-minute chart? Boss, this is too complex. No, it's not. This is nothing special. Forex course 101 is the foundation. Everybody, here stop loss goes on the higher time frame. Now, if you are looking at the 4-hour chart, the yellow, as the short-term trend, short-term downtrend, but you are a day trader trying to take advantage of a retracement, where, or mean on what time frame are you going to spot these higher highs, higher lows faster? Applause to Mo, the smaller time. Oh, but you just don't mix the two. Alright? Trading the 4-hour market wave, it's one. Trading a retracement on the short-term trend, it's something else. Those two are not the same. Okay? You are mixing books. The 4-hour market wave works in this way, and on the 4-hour chart, on the retracement, the market works in a different way. Alright? Sam, 15-minute chart, congratulations to you. Boss, there is a lot to learn. There is a lot to learn. Okay? Everybody, please understand that you are trying to make sense out of it, alright? Does anybody have any questions about the market wave? Type in the chat. Does anybody have a question about the short-term trend retracement? About the retracement on the short-term trend? Okay, so this is, everybody, give me a second, maybe maybe in this way is going to be better for you to understand. So this that you are trading right now is this in here. Okay, you are trading this one now. All right, maybe better for your consciousness, for your mind, for your brain to understand. This is a pattern that works in one way. Now you are micromanaging. Some of you want to be day traders. Okay, you are going to have a different way of doing things, different methodologies. You are going to enter in a different place compared to long-term swing traders. All right, so you are entering in here trying to take advantage, all right, of a retracement. Okay, everybody, does this make sense to you? Okay, now do you want, so I would advise you not to enter the first one because you are speculating. I would advise you, and remember, this is no, man, I would advise you, right? So it's not trading advice, we're here to learn, right? Okay, so to be more, everybody, does this make sense? If you enter here with the bullish candlestick formation, this would be a speculation trade, right? Because you have just a bullish candle or a candlestick formation, okay? Okay, you're speculating the market is going to go up, all right? But when you have a higher low, you have a 75, not 100, but you have a 75% confirmed uptrend on the 15-minute chart, 30-minute chart, all right? So, do you want to put the stop loss below the candlestick formation? On the 15-minute chart this time, do you want to put the stop loss below the trend line? Would be number 2. Or do you want to put the stop loss below the short-term trend, previous relevant low on the 15-minute chart? All right, we are working on your strategy today. You have 3 variables. Write this as a rule. You have a homework until tomorrow. Define where you are going to put the stop loss. Always. Always, all right? So if we get out of here and we get into here for our chart, and so give me a second, everybody, trying to find the retracement, extension, retracement, extension. All right, in here, right? Uptrend, downtrend, extension, retracement, extension, not a good one. All right, very good. So extension, retracement, extension, right, everybody? All good? And yes, just an example, so nothing here. And this is the 4-hour chart, right? So the market is falling, the market is falling, so this is the counter trend line break on the extension, and the market is falling. So let's say that I'm a day trader, I want to take advantage of a retracement, just an example to put theory into practice. Okay, now vertical line, we are looking to see what? A change in the short-term trend, right, after the extension. Give it a second. By entering the second one is premature. By entering the first one, maybe it's premature. Say maybe you typed a typo, maybe entering the first one. Come on, Forex, it's not Friday. There you go. Alright, everybody, now you're looking at the 4-hour chart from the 15-minute or 30-minute time perspective, okay? Can you see 30-minute? Lower low, lower high, lower low, lower high, lower low, lower high. Can you see it? On the 30-minute chart, can you see it, everybody, the green one? So we're going to wait and there you go. Can you see it, everybody? How this market works? Forex course 101. Give yourself a year to learn. Alright. Can you see here? This is bullish candlestick formation, where I would not enter yet because this is pure speculation, you know. It's 50-50, you know. There is nothing that it's telling me, oh, this market goes up. Now on this one, the market made a higher low. Agreed, everybody? Type in the chat one more. Low, center candle with 2 candles on the left and 2 candles on the right. Do we agree that the market made a higher low? Everybody. And do we agree that this is a high? And also the market made a higher high. Do we agree? Type in the chat, yes, I agree, or type in the chat, yes, I agree. No, I'm just joking. Type in the chat, no, I don't agree, you know. Do we agree? Boss, where can I find more lessons? It's on Dukas Copy Academy. You have 5 years. Everybody. Dukas Copy Academy, just go to playlist and you're going to find the same course last year, this year. We start 2017, I believe. Okay, yes, alright, we agree. Okay, everybody, so out. We can chart an uptrend line, right? And now it's up to you. This is a 75% Bitcoin again. This is a well, it's 100%. So if you want to put the stop loss, put it in here. All right. Now it's a 100% confirmed uptrend. Right. Now vertical line again. Okay. Now we need to go back to the 4-hour chart. Why? To see. All right. Going to delete this one to see where are past resistance levels, right? Okay. Now, this would be past resistance level, just an example. So this would be past resistance level here and here. All right. This would be past resistance level. This is already past resistance here. This is already past resistance. This would be past resistance here again. We've learned all of this, setting set of stairs. We've learned all of this, how to chart. We've learned all of this, okay? Now, we're going to back to the 30-minute chart. Okay? And this is the entry for a day trader. You can go on the 50-minute chart too, not a problem. This is the entry for a day trader, all right? And up in here at past resistance, we are going to profit take, all right? Let's see how smart you are. How do you know when to get out? Everybody, I'm going to help you because we have 8 more minutes. You want to see a change in the short-term trend. Do you want to see a change in the short-term trend on the 30-minute chart? Or do you want to see a change in the short-term trend on the 4-hour chart? Or do you want to see a change in the short-term trend on the 5-minute chart? For day traders, how this goes? What is the process? Boss, is this a strategy? No, this is not a strategy. This is how this market works. I thought this is a strategy. This is not a strategy. You need to build yours. How to enter, what is the entry setup, where to exit, how to exit, what is the exit setup. Okay, we are talking about entries and equity management, meaning risk reward ratios and such. Boss, what is the question again? Where would you get out is the question. Applause to Mo. 5 minutes. Why 5 minutes? Higher time frames controls price action and movement on the smaller time frames, but the reaction of the market is visible on the lower time frame first, okay? Everybody, don't mix apples with bananas. This is not a strategy. Those are trading concepts. How this market works, all right? Now, let's see, okay? So we are here, and we are in a trade, all right? And the market is up and down, okay? Now I'm here, and I'm going to go on the 5-minute chart. Okay, I'm on the 5-minute chart now, and I'm charting, you know, high to low, low to high. Let's chart the next one. High to low, up in here, and all right. So here the market reversed already. High to, that's a low. That's not a high. High to low. Low to high, high to low. See in here? Here you should get out. Okay, does this make sense to you? Now, this is not a strategy. Now, what if I don't obey this concept from the 4-hour chart, not 4 hour, 15 minute, from the 15-minute chart? What if I don't obey this concept and I'm staying in, right? I don't want to accept, so I'm staying in, and should you listen to the boss? Yes or no? Boss, we see the lower high from the 15-minute too. Yes, that's true. See everybody? If you're a day trader and you get out in here, I'm going to call you in the office and I'm going to say, Mo, why did you end up with the break even? Mo, or stopped out. Mo, why did you end up with the break even? And Sam, why did you end up as a loser? Sam and Mo, come to my office. Sam and Mo in my office now. Mo, why did you end up this specific trade in the break even? And Mo, why did you end up at the break even? And Sam, why did you end up with the loser? Didn't you go to Forex course 101 with the boss? Yes, we did. Didn't he teach you that you go on the 5-minute chart and when you spot a change in the short-term trend on the smaller time frame for day trading that you need to get out? Yes, he did. Why don't you listen? Everybody study the charts, alright? I'm not sure if we have enough time to do one more. Do we have time to do one more? One more, alright. One more, maybe. But it's not. Everybody, one more. So how would you chart? You need to wait for you to chart this trend line. You need to have a higher high, right? Alright, so here. Okay. Everybody, this would be the entry, right? And vertical line, let's go to the 5-minute chart. Let's see what would happen if we would follow highs and lows on the 5-minute chart. Let's see. So not a high, so low to high, high to low. Those are the relevant. Higher high, that's the relevant. Even on the 5-minute chart, not all highs and lows are relevant. 5-minute chart, high to low, low to high, high to low, low to, give me a second everybody, we need to dissect this. This is why day trading is challenging. High to low, that's a high, high to low, low, a high, high to low, low to high, and change, right? So high to low, lower high, lower low. Change in the short-term trend direction. All right. And if I go back to the 30-minute chart, where is this change of the short-term direction happening? Whoops. Everybody, can you see how this market works? But boss, 5 minutes, is it reliable to get out? Mo, again, you are asking a question about a strategy, my friend. This is not a strategy. Okay? The concept is when you see the change in the short-term trend, get out. It's a concept. Would this make sense, everybody? If you would manage the trade, and see the change in the short-term trend, especially this one, at past resistance from the 4-hour chart, like in here, if you would stay out, look what happened. Look what happened. Everybody studied the charts with what I'm telling you, right? It's nothing special, believe me, this is basic stuff. Does this make sense? This is nothing special. Alright everybody, our time is up. Okay everybody, Mo, if you have any questions about Black Friday, everybody, remember this cost is 50% off. And the number 5, it's here, if you get to the last one, it's going to be 0.5%, 50% off, is 250. Number 5, you get the Advanced Institutional Trader Program, group call, not private class, group call forever. Okay? Boss, what if I cannot participate? You are going to have the recordings forever. Or until you die, or until I die. Alright everybody, this is how we can help you. Okay everybody? Any questions? Send me an email. See you back tomorrow. This is the boss signing off. Study the chart as a boss, everybody.